So let's talk about market structure today. All right, first things first, when you open your chart, what do you look out for? You look out for market structure. That's the first thing to do when you open any forex chart. You need to look out for the market structure. Why? Because you need to know the direction of the market before doing anything, right? Just like you wanted to go get something at the marketplace. Let's say you want to go get pepper at the marketplace and you don't know your way to the market. How do you want to get there? Right? So first things first, when you open your chart, what do you look out for? You look out for market structure. Now, what is market structure? Market structure simply just tells us the direction of the market. It just tells you the direction of the market. You want to know if the market is moving upward. You want to know if the market is moving downward. You want to know if the market is moving sideways or choppy, right? Now, we have types of market structure. We have three types, basically. The first type is trending market. Aside from Forex, when you say something is trending, what does that mean? It simply means it is currently in vogue, right? That's what everyone is talking about, right? And it could either be positive or negative. I'm sure you guys are aware. Something positive can be trending, something negative can also be trending, right? So in this case, in the Forex world, when you say the market is trending, it can either be trending upwards or trending downwards. That is, under trending markets, we have the uptrend and downtrend. Now, let's talk about uptrend markets. In the Forex world, the market does not move in a straight line. The market moves like waves. Are you with me? The market moves like waves. So when you say the market is going up, that does not mean the market is going up in a straight line. All right? As the market is going up, it is going up and creating waves. Right? So if the market is going up, the market cannot keep going up forever. Same thing, if the market is going down, the market cannot keep going down forever. So that's why you need to know the rules pertaining to uptrend, downtrend, and all other market structure, so that you would know when the uptrend structure is done, or when the downtrend structure is done, or when the ranging structure is done, or when the choppy structure is done. Right? So now let's talk about uptrend. Right? Uptrend market is a type of market structure. Uptrend market is a type of market structure that creates series of higher highs and higher lows. Uptrend market is a type of market structure that creates series of higher highs and higher lows. Now let me show you guys how an uptrend market looks like. You can see, regardless, where's the direction of this market? Regardless, the market is moving upwards. But I said something. I said in the Forex world, the market does not just move in a straight line. The market is going up and down, creating higher highs and higher lows. But then again, where's the direction? Upwards, right? HH means higher high. Then HL means higher lows. HL means higher high. HH means higher high. HL means higher low. Now, where is the higher high and where is the higher low? Now let me tag them. Higher high, higher low, clone, higher high, higher low, right? So now look at this. This is high, true or false? But the next one is higher than this previous high. Right? So when you say higher high, you're trying to tell me that the next one is higher than the previous high. So if it's coming down to create higher low that is higher than the previous low. If it's going up to create higher high that is higher than the previous high. Are you with me? Now, if it's going up to create a high that is higher than the previous high. If it's coming down to create a high that is higher than the previous low. If it's going up, higher than the previous high. If it's retracing, higher than the what previous low. Now the rule states that it must not exceed the previous higher low. It can be equal, but it must not exceed the previous higher low. Because if it exceeds the previous higher low, that means that uptrend structure has broken. Are you with me? The uptrend structure has broken, because rule states that if the market is going up, and if the market is going up to create higher high, if it's coming down to retrace, it must not go beyond the last higher low. It could be equal, yeah, the uptrend structure still retains, but it must not what? It must not close below the higher low. Now, that is, the market came here to give me what? Higher low. If it's going up to create what? Higher high. That is a high that is higher than the previous high. Let me quote it. Higher high that is what? Higher than the previous high. Now, if the market is coming down, it's coming down to create what? Higher low. A high that is higher than the previous low. Like that. You can see the market is moving like zigzag, but in what direction? Upward direction. Now, if the market is going up again, what's the market going up to create? It's going up to create what? Higher high. If the market is coming down again, what is the market coming down to create? Higher low. It could be equal, right? But the rules state that it must not break. If it breaks, that means the uptrend rule has broken. That market is no longer an uptrend market. Because in an uptrend market, you look for buying opportunities, right? So in a case where that uptrend rule has broken, you will no longer look for buying opportunities. Are you with me, guys? So if the market breaks this last higher low, where's the last higher low? This is the last higher low. So if the market breaks this last higher low, what does that mean? It means that this uptrend structure has broken. And in that note, I will stop looking for buying opportunities, because at this point now, there is a change of character. Chalk, let me note it. CHOCH, also called change of character. It's a short form of change of character. So where did the change of character happen? Here. Because that is where the rule got broken. Are you with me? That is where the rule got broken. So in that note, there's a change of character here. Because the rule states that it can retrace from any point, it can retrace at equal points, but it must not break the last higher low. Are you with me, guys? So now, let's talk about downtrend. Or before we talk about downtrend, let me give you guys another scenario. Now look at this. Look at this. Higher low, higher high, higher low, higher high, equal low. This is giving me equal low, right? I can still call this uptrend because the market is still going up, right? Look at this. The rule states that it must not break the previous higher low. In this case, the market did not break it. It was equal. But if the market breaks it, that means that uptrend structure has failed. That market is no longer an uptrend market. Now you need to spot out where there's a change of character. Now in this case, the change of character is here, like I explained earlier. Why is the change of character there? Because this is the last higher low, and the rule states that the market must not break the last higher low. The higher low got broken at this point. So in that note, this market is no longer an uptrend market at this point. So I will no longer look for buying opportunity because my uptrend structure has failed. Where did it fail? At this point. So now let's talk about downtrend. Like I said, we have the first type of market structure. We have the trending market, right? Under the trending market, we have the uptrend and the downtrend. We've spoken about the uptrend. Now let's talk about the downtrend. Downtrend market is a type of market structure that creates series of lower highs and lower lows. That creates series of what? Lower highs and lower lows. Now let's tag them. Lower high means what? ALH means what? Lower highs. Then LL means what? Lower lows. So let's stack them. LH, LL, so now back at it again, right? This is high, but obviously this is lower than the previous high. That's why it's called lower high. Yeah, so if the market is coming down, it's coming down to create a lower low, a low that is lower than the previous low, a low that is lower than the previous low. Now if the market is coming down, lower low, a low that is lower than the previous low. If it's going up, it's retracing to create what? A lower high, that is a low that is lower than the previous high. You can see this is high, but this is lower than the previous high. Yeah, now if it's coming down, what's it coming down to create? A lower low that is lower than the previous low, right? Let's target clone. Lower low, lower than the previous low, right? If it's going up, it should create what? A lower high that is lower than the previous high. Let's target. It can be equal. Don't forget that. It can be equal in the sense that if the market reacts from here, when I say equal, it can react from here and still come down. The downtrend rule still holds, right? But it must not break this last lower high. That is, it must not break it. If it breaks it, that means that downtrend is no longer in place. Are you with me? So now, like I said, lower high, it creates a series of what? Lower highs and lower lows. If it's coming down, it's coming down to create a low that is lower than the previous low. If it's going up, it's going to create a what? A low that is lower than the previous high. Are you with me? So now it can also be equal. That is, if the retracement is equal, you can still consider that downtrend. But if it breaks above that lower high, then that market is no longer a downtrend. Now let me give you guys another scenario before we move to our live charts. All right, so look at this. Look at this. Look at this. Look at it. Talking about this is downtrend. Sorry. Look at this. This. You can see this is downtrend, right? Because it's creating a series of what? Lower highs and lower lows. Lower highs and lower lows. Lower highs and lower lows, right? You can also call this a downtrend. Lower low, equal high, lower low. This is also downtrend, right? Because the rules state that it can be equal, but it must not break it. And as you can see, it did not break it, all right? So that's all about downtrend. So when you see a downtrend market, you should look out for what opportunity? Selling opportunities. When you see a downtrend market, you look out for selling opportunities. When you see an uptrend market, you look out for buying opportunities. When you see a downtrend market, you look out for what? Selling opportunities. Now let's go to our live chart and spot all of what you've learned. So from what you've learned so far, right? What would you call this? This area that I tagged, what would you call this? This is obviously an uptrend market because it is creating a series of what? higher highs and higher lows. It's creating series of what? Higher highs and higher lows. You can see higher low, higher high, higher low, higher high, higher low, like that. And like I told you, the market cannot keep going up forever. You need to know when there's a change of structure, change of character. Are you with me? Because the market cannot keep going up forever. The market cannot keep going down forever. So when you know the rules pertaining to all of these structures, you can tell when there's a break of rule. So look at this. This is obviously an uptrend market, right? Now, let me give you guys a quick scenario. Look at this. What happened here? The market moved from uptrend structure to downtrend structure. So if you are looking for buying opportunities somewhere around here, right? Where would you stop looking for buying opportunities? You will stop when there is a what? A change of character. And obviously the change of character happened here. The change of character happened here because this was the last higher low, right? And the rule states that the market must not break the last higher low. Let me tag them quick. Hold on. Higher low. Higher low. Let me tag the other one. Higher high. Higher high. Higher high. So obviously this is an uptrend, right? Now the rule of uptrend states that if the market is going up to create what? A high that is higher than the previous high. If the market is coming down to create what? An equal low or a high that is higher than the previous low, right? And the rule states that if the market is coming down, if the market is coming down to retrace, it must not break the last higher low. It must not break the last higher low. Currently, this is the last higher low for this uptrend. Now, what happened? The market broke past this last higher low, giving us a what? Change of structure, if you remember. Giving us change of structure, change of character, I mean. Still same thing anyways. Giving us change of character. Now, the change of character happened where? The change of character happened here. Because the rule states that it must not break the last higher low. If it breaks the last higher low, that uptrend structure is no longer valid. So the change of character happened here. So what happened? Market broke past it, came here to retest, continue. Now it is creating what? A downtrend. That is lower series of what? Lower highs and lower lows. So in that note, what opportunity would you be looking for? You'll be looking out for selling opportunities. Are you with me? You'll be looking out for selling opportunities, all right? Let's go. Lower high. Lower low, like that. So you can see the shift that happened here. The market shifted from uptrend to what? Downtrend. Let's assume you don't know how the rules works. You will not know when there's a change of structure. You will not know when there's a change of character. You just keep buying, forgetting that the market has changed structure. Are you with me? So now, let's go back to our live chart, right? Looking at this, what would you call this? This highlighted image, what would you call this structure? You can obviously see that this is a downtrend structure. Why is it a downtrend structure? Because the market is creating a series of what? Lower highs and lower lows. It's creating a series of what? Lower highs and lower lows. So in that note, you'll be looking for what opportunity? You'll be looking for selling opportunities. You'll be looking for selling opportunities. You'll be looking for selling opportunities because the market is creating a series of what? Lower highs and lower lows. Look at this area that I want to highlight now. What is the market creating here? Obviously, you can see that the market is creating a series of what? Higher highs and higher lows. So obviously, the market is moving in what trend? Uptrend. Now, look at this. What happened here? The market shifted from uptrend to what? Downtrend. Then from this point, the market started creating what? Series of higher highs and higher lows. That is, it shifted from where? Downtrend to uptrend. Let's go from here again. Uptrend, downtrend, then it changed to what? Uptrend. So in this case, I'll be looking for what? Buying opportunities until there's a change of character. Then I can now start looking for selling opportunities. Are you with me? So now let's look out for the second type of market structure. Let's look out for the second type of market structure. Second type of market structure. The second type of market structure is ranging markets. Ranging market is simply a type of market structure that goes up and down in a confined area. That goes up and down in a confined area. Ranging market is a type of market structure that goes up and down in a confined area. That goes up and down in a confined area. So what opportunities do you look for when you see a ranging market? You look for buying and selling opportunities, because you can see the market is just going up and going down, right? So you look for buying opportunities somewhere around here, because you notice that whenever the market gets here, it goes up. Whenever the market gets here, it starts coming down. Whenever it gets here, it starts going up. Whenever the market gets here, it starts coming down. So in that note, you look for buying and selling opportunities. So where do you look for buy opportunities? You look for buy opportunities below, and you look for sell opportunities above. Are you with me? So apparently the market is just moving up and down in a confined area. Up and down in a confined area. Like you're just literally going up, down, up, down, up, down, up, down, up, down, like that. So in this case, you look for buying opportunities down here, selling opportunities up here, because you know that whenever the market gets here, it bounces off, right? Until there's a breakout. Are you with me? So this is how a ranging market looks like. Now let's go to our live chart to spot a ranging market. So look at this. This is a ranging market. You can obviously see that market is going up, down, up, down, up, down, up, down in a confined area. So in this case, what do you look out for? You look out for buying and selling opportunities, right? Now let's talk about the last type, which is the third type of market structure, choppy market. A choppy market is a type of market structure that has no clear direction. A choppy market is a type of market structure that has no clear direction. When you see a choppy market, you run away. Why are you running away? Because the market literally has no clear direction, right? So there's nothing to trade there at that moment. There's no clear direction. So when you see that type of market, what do? You avoid the market, because the market is not moving, it's not ranging, it's not trending, it's just choppy. So that's the kind of market you avoid, because there's no clear direction. So now let's look out for choppy market on our live chart. Because the market is just choppy at this point. It has no clear direction. It's just choppy at this point, right? So when you see a choppy market, what do? You avoid the market at that moment. You avoid the market at that moment, right? So yeah, this is just like the I call it beginner's market structure, right? Because you need to also learn the advanced part of market structure, right? Of which I'm going to teach you in my next YouTube video. So subscribe to this YouTube channel and watch out for it. Cheers. Take care. Ciao, ciao.